There seems to be a new ETF out every day, and there are a lot of international ETFs that deserve your attention as a trader as well. Our guest today is Deron Wagner to talk about that. He's an ETF expert. So Deron, why international ETFs? What are the benefits?
One of the benefits, Tim, of international ETFs is the fact that there's a lot of diversity in the ETFs. In other words, they have a low correlation to the U.S. stock market indexes. So sometimes, although the U.S. stock market may be going down, there's international ETFs that'll trade completely opposite in a divergent manner. There's low correlation.
Are we talking about ETFs that focus on a specific country or even specific sectors within various countries and areas?
Both. There's ETFs that are specific regions, such as Europe, and then there's country-specific ETFs as well. In fact, there's a large variety now of ETFs. A couple years ago, there was only ones to cover the main markets, but now there's many that cover the emerging markets, which are actually doing very well right now.
All right, so what are some of the risks I need to be aware of with these international ETFs?
Well, with the international ETFs, one of the things to be aware of is that in the morning, they do tend to have a larger gap on the open, meaning that they open significantly far away from where they closed the previous day, and that's because they're trading generally in a different time zone, the market, and then when the U.S. market opens, they get adjusted. So they do have big gaps, is one risk. Another risk to consider is that some of them are very light volume. So with ETFs, volume doesn't matter a lot because they are synthetic instruments, but sometimes the spread will be a little bit wide if the volume's too light. So we tend to look for ETFs to do at least 100,000 shares a day, average volume.
And how aware do I need to be of the news in the specific country or area that we're talking about? I mean, is it something where I really need to be familiar with that country's business?
I think it depends on your strategy. For me, no. For me, I basically just look at the charts, and I find that I just use technical analysis the same as I use for all my other trading ETFs and stocks. The beauty of the international ETFs is that stock markets around the world, they basically perform the same way because markets are driven by fear and greed, and the human emotions of fear and greed are the same around the world. So you'll find that regardless of which region or which country you're trading in, the technical analysis concepts that I use work the same.
What are your favorites? Can you give us an idea of a garden variety tool?
Sure. I like to use relative strength, not the relative strength indicator, not RSI, but by relative strength, I overlay the specific ETF of a country with the S&P 500, and I look for compare the percentage changes of them, and look for divergence, bullish divergence. Generally, the ETFs that are performing well or holding up as the S&P, for example, goes down, those are going to be the strongest ETFs to lead.
Deron, thanks for your time.
Okay, thank you, Tim.
You're watching the MoneyShow.com video network. My guest today is Deron Wagner. He's an ETF expert, and we're talking about leveraged ETFs and inverse ETFs. You may have traded regular ETFs in the past, but what are the risks and benefits of these particular ones? So Deron, talk about, first of all, how these leveraged ETFs work.
Well, the way the leveraged ETFs work is when you buy an ETF that's leveraged, it actually will move at a multiple of the underlying index. So, for example, if you bought a leveraged ETF that follows the SPDR, the S&P 500 SPDR, if the S&P 500 is up 1%, the leveraged ETF would be up 2%, and vice versa as well. Generally, the leveraged ETFs, there's several different varieties, but generally they move at a multiple of 2 times or 3 times the underlying index.
Now, you hear of traders taking a lot more risk when they're doing this, though. Is it something you recommend only intraday, or can I hold these overnight?
Well, I think that there's a couple of factors to consider. One is you need to make sure your position size is adjusted accordingly. So we keep our risk the same with every trade we take in terms of the capital, the dollars risked. So if we're using a leveraged ETF, then we have to reduce our share size to keep the risk in line. The other thing to consider is that they can be used overnight, but there's actually an underperformance that comes when you hold them longer.
All right, and how about inverse ETFs, another kind of the cousin of these leveraged ETFs?
Yeah, the same thing applies. Both the inverse ETFs, the way they work is they actually move in the opposite direction of the index. So if you've got the S&P 500, for example, up 1%, the inverse S&P 500 would be down 1%, and vice versa. So normally the inverse ETFs are what I find the most useful for is people that have IRA accounts, because retirement accounts are not marginable. So if you have a retirement account and you want to take a bearish position, give some exposure in a bear market, you can take an inverse ETF that will actually go up as the underlying index goes down.
All right, and so why then, you mentioned the share size before on the leveraged ETFs with 2 times or 3 times. Why not just triple or double your size on the regular ETF? Why trade these leveraged ones?
Well, the leveraged ETFs, they're ideal if people have smaller accounts. It gives you, more bang for the buck, so to speak. But they are recommended mostly for short-term trading. Not necessarily day trading, but we don't like to hold them more than a couple days. They tend to underperform the index because there's a daily rebalancing of the portfolio every day.
Deron, thanks for being here.
Okay, thank you, Tim.
You're watching the MoneyShow.com video network.